Welcome back. You're tuned into Inside Out here on CNBC-TV18. Well, it's time to focus on our Swotlight segment. Sonal, what do you have for us today?
Well, Nigel, I wanted to look at a company where it is spoken about, but the business is not understood so well. So CarTrade Tech is something that came on my radar. It listed in August 2021 at 1,600 rupees per share at a discount to the issue price. But since then, it has seen a one-way decline for the stock price as well. Something that we saw with all the new age companies. So what does the company do? If someone wants to buy or sell a car sitting at home or sell an old vehicle, the company helps. It is a digital automotive platform or an aggregator that facilitates buying and selling of new and old vehicles between customers, OEMs, dealers, banks, insurance companies, and all the stakeholders which are involved. And it has many platforms or brands under which this works. There's Carvale, Bikewale, there's CarTrade, Shriram Automall, there's CarTrade Exchange, Adroit Auto, and AutoBiz as well. Now, Carvale, Bikewale and CarTrade, it is used by potential car or bike buyers to research and compare a wide range of available options and also to connect with dealers, OEMs and other partners. How do they earn money here? Now, company here monetizes these platforms by paid ads and marketing campaigns. These campaigns come in from OEMs, their dealers, banks, insurance companies and other financial institutions which put out ads on these websites. Shriram Automall or SAMIL. This is where the company acquired it in 2018, and CarTrade Exchange. They are platforms where company facilitates sales of pre-owned vehicles, and here it earns commission and fees from the auction and remarketing services. Lastly, it provides ancillary services such as valuation, there's inspection and registration via Adroit Auto as well, so a whole host of services.
Well, Sonal, so many services and business segments as well. You said the stock has seen a sharp fall. Did it have anything to do with the financials?
Well, since the time I've seen this sharp fall in the stock price as well for many new age companies, but that is not something that we've seen in the revenues, so to say. Revenues have been between 250 to 300 crore rupees for the company. On 9 months basis, it is averaging around 270 crore rupees. These companies report adjusted EBITDA margins, which many long-term investors stay very wary of, right? For this company, adjusted margins have been around 28% as per the investor presentation for last 2 to 3 years. Now, when it comes to profits, they made 103 crore rupees in FY21. Then there was a massive loss of 121 crore rupees. And now in 9 months, it's back to profits of around 23 crore rupees. Quarter 3 and Quarter 4 are usually stronger quarters for the company. And also a positive is that it is a debt-free company with a cash balance of close to 1,000 crore rupees. So that works in their favor.
Well, that's right. Having cash in the books always gives some kind of support. But what are the other metrics we need to track for this company? Also tell us some triggers here, possible things an investor should evaluate while looking at the company.
So it's a website, right? So the number of visitors on the website and how many of them actually convert to a customer is important to track. From levels of around 27.1 million unique customers in Quarter 1 of FY22, then going up to around 30 millions, that is in Quarter 4. Company in the last quarter saw unique customers of around 35.4 million. And that looks like a sustainable range. Out of this, organic unique visitors were at 87.6% and the rest is from actually paid sources. In terms of possible triggers or important factors, company launched AppSure. This is to sell their cars via franchisee network for used cars. It has 57 outlets at 34 locations where company takes 60 days to buy a vehicle, refurbish and sell it. It is a very small part of revenues right now, but analysts have been very bullish on it because they expect future revenue growth for the business to be driven by faster growth for AppSure. However, company in Quarter 3 said it will take another quarter or 2 quarters to focus on revenues and margins for AppSure. The second is Shriram Automall or SAMIL. This is an acquisition and a captive B2B auction platform. This is for the repurposed inventory of Shriram Transport, which is then auctioned on its platform. Auction volumes went up 9% in 9 months, but they were weak in Quarter 3, and that's the reason why everyone called it weak numbers. So this is an important segment to track for the company.
Okay, interesting. What are the key risks, though, in this case? Not growing profitably is one for sure. Also, valuations and shareholding pattern. Interesting.
Okay, yes. So that's been a big worry for investors, right? For new age companies to grow profitably. They are also unable to break into Maruti that accounts for 43% of cars sold in India in FY22. So this will be an important account. Additionally, while analysts are bullish on AppSure, but this thing is not gaining so much market share. In terms of valuations, price to sales is what I'm looking at right now. It is coming to 1.3 times versus 4 times at the time of listing. That's the kind of price damage we have seen. Interestingly, promoters do not hold any stake in the company. and some big names are a part of the shareholding. Mutual funds at 3.21%, we have AIFs at 2.12%, FDIs at 52%, and the FPI category has it around 20.55%.
Well, Sonal, that was indeed a very, very interesting piece and some very, very good information that we had on CarTrade Tech. But we've completely run out of time on this edition of Inside Out. It's goodbye from Sonal and myself.
But do write to us and tell us the companies you want us to discuss and you want to hear about. We'll feature these on our show. Thanks a lot for watching us today.